Hey all. Good morning and welcome to ShareTreck. This is Raj here. Friends, these days I've started issuing pre-market shorts as well for people who don't have much time. And basically, it's a condensation of what I do during the live stream. So for today's live stream, this is what I have in mind. I think that the Wall Street is powering ahead despite cracks underneath, and the US stocks have come off another record-setting day. The S&P 500, Dow, and Nasdaq all closed at all-time highs yesterday as traders piled into the market on Fed rate cut optimism, even as the economic foundation looks shakier than ever. Early morning futures are mixed with cautious trading ahead of crucial inflation numbers due later this week. Today, actually, we're going to get some of those economic data that we are looking for. I'll talk about that when we go into our TradingView platform. And one of the reasons why the bullish run feels so contradictory is that there is a lot of fundamental weakness, which I have pointed out time and again for the last 3 months. Revised data now confirms that US job growth has been weaker than reported for over a year. That's a significant revision downwards, and the labor market's cracks are widening even as Wall Street cheers more easy money policy. If you look at gold, gold just hit another record, about 3,650 per ounce, up 45% year over year, showing traders and big investors are hedging against all this uncertainty, inflation jitters, and the view that policymakers may soon lose control. One of the other factors that is playing a big role, in my opinion, with gold prices is the fact that many central banks are replacing US treasuries with gold. So the proportion of gold in the central bank reserves across the world has increased as compared to US treasury. So that's also another reason why gold is out of circulation and the demand is high, and therefore the price per ounce is creeping up. Now, the US Treasury remains heavily reliant on short-term debt to avoid locking in higher long-term yields, rolling over trillions in bonds. I had made a video about this earlier. Sorry, I didn't make a video. In fact, I'll go ahead and make a video about this and explain it in detail. But in my previous live stream, I had mentioned about this, that US is using short-term treasury bills to raise funds and using that money to extinguish long-term bonds so that the long-term bonds are renewed as short-term bills with very low interest rate compared to what the long-term would yield. As far as the long-term yields are concerned, it's in the hands of bond holders and bond vigilantes. And they are giving a clear signal that even if the short-term rates are reduced, long-term is not going to budge. And the strategy of buying selling short-term debt to buy back long-term debt might work for a short period of time, but makes funding costs extra sensitive to market swings and surprises. On the global stage, the administration is urging Europe to match US tariffs of up to 100% on India and China, with the Supreme Court set to fast-track judgment on the president authority to impose sweeping tariffs. Tariffs are now lifting consumer costs. The average 2025 US tariff rate has climbed to its highest since the Great Depression. And if the court rules that the US has got to pay back all the tariff it has collected, I don't know how much of a strain the US government is going to be in. And while 8 of 11 S&P sectors rallied yesterday, the breadth is narrowing and the trading volume remains light, hinting at traders' cautiousness, and the buying the rumor of cuts while selling the news could come to a fruition very soon. In other words, as soon as the Fed announces a rate cut, you could see a market also drop at the same time. So whatever is in the news about the Fed's impending rate cut is already baked into the price. And once the rate cut is announced, there is nothing more out there. So that's why the market might fall off. That's at least my speculation, and it's supported by a whole lot of other views in the media. And the inflation test is going to happen on Wednesday, that is today. Producer price index is going to be revealed. We have to see if the producers are still eating the tariffs. And if the PPI comes a little less, then the next thing I would like to watch is the CPI coming tomorrow. The CPI will either confirm that inflation is cooling, keeping the Fed on schedule for a rate cut, or expose stubborn pressures that could upend bullish bets. And that will be the first encounter for the Fed with real stagflation, because on one end, the Fed wants to keep inflation under check, for which it has to keep the interest rate firm. On the other end, it wants to make sure that the employment numbers don't go bad. For that, it will have to reduce the interest. Which one does it prioritize? So that is going to be the biggest problem for Fed, which it has been trying to avoid for a long period of time. We could probably have a smooth landing if it weren't for all the policies, including the tariffs that rocked the boat. We could have waited patiently for the smooth landing to happen and then gone on for all these other measures in a careful and thoughtful manner. But alas, that didn't happen. But as market players, we shouldn't worry too much about those things. We should focus on retaining value of our portfolio and getting gains wherever it is possible. So markets are hanging on every decimal. Sticky inflation, persistent job weakness, and tariffs could snap sentiment at any sign of trouble. And from my perspective, if I was to round up everything and say, what is my state of mind? I would say that the bullish price, bearish underbelly, Wall Street's buy everything fewer is not rational. It's a reflex to expected Fed stimulus and merger and acquisition buzz, but the cracks are real. Gold's rally, the government's short-term debt squeeze, and the trade tariff mess all highlight reasons for deeper caution. The rally could keep running, but it rests on a knife's edge. As individual retail investors without that kind of a depth and access to insider information, I think we have to be absolutely cautious. From my perspective, as I had mentioned before, my shorts are bleeding. So day before yesterday, I reduced some of my shorts. I still have FNGD, which I have got to reduce. So I'm going to take some actions today to reduce some more of my shorts. And I have a little bit of long on NVDA. I might enhance that. The idea now is that my expensive lesson that I've learned from this debacle is that fundamentals are there. They give you caution, but do not disregard the market momentum and market sentiment. Of course, if you look at the TradingView platform, you'll see that the market sentiment for most stocks is bearish, but the momentum is pretty good and it's going on the bullish direction. So I have to pay heed to that. So with that said, let's go and have a look at the TradingView platform. I'm sorry about that, my friends. A little bit of dryness on the throat from talking for a long period of time. Okay, here we go. Let's go into the TradingView platform. And I'm thinking that any of my fundamental fears are not reflected in any of these charts. Therefore, we'll just go by the momentum and look at where we could get a resistance. Now, I'm looking at S&P 500 futures. I'm going to just expand this chart and recalibrate it so that we can see it clearly. We have this diagonal line of resistance, which is underpinned by a whole lot of candles out here, at least 3 out here, 4, 5. And that shows that we have got a hard stop out here, somewhere around 6,545.50. Pre-market, we are already at 6,544.75. The chances of it going up is pretty good given that MACD is bullish, momentum is above average, plenty of room on the RSI. The only reason one could give pause is because market sentiment is bearish. So who are these people who are buying and buying and buying and thinking that there is no end? If I just zoom out from here and show you, we have this parallel channel in which we have been for a very long period of time. I keep on going and going and going. But this is the parallel channel in which we have been since, I would say, 23rd December 2021. So this is a very strong channel. And we are broken out of the channel. And we are trying to move away from this channel. And as you can see here, we have gone 3 days above this channel. We have one more resistance coming here and another resistance which moves upwards this way. So there's a bunch of resistance out here. Market sentiment is bearish. So why is there this momentum? The answer seems to be that the Fed rate cuts. Now, if Fed rate cuts are already impacting the market and taking them upwards, then the question becomes what happens when the Fed actually declares rate cut? If they do a 25 basis point, I think we're going to come down. If they do a 50 basis point, I think we'll go up a little bit and then come down. So that's the calculation I have in mind. I would like to hear from you guys what you think. Please put it in the comment section. Next, let's look at NASDAQ. NASDAQ also continues moving up. We have an all-time high out here, which is around 24,042. That could be our resistance for today, and our support for today is going to be 23,791. Again, the market sentiment is bearish, as you can see at the very bottom out here. MACD is bullish. Momentum is above average, plenty of room on the RSI. So everything is momentum based, and momentum is very bullish right now. It's difficult to fight that. And dollar index is up mildly. It's up 0.03 cents. But overall, if you see, the trajectory has been consolidating downwards with a support somewhere around $97.27. So that's what we have out here. And if you look at the yields for long-term bonds, they're all going up. Now, 5-year has gone up. 10-year is also up 0.001%, and 20 years is up 0.15%, and 30 years is up around 0.22%. We had this head and shoulder pattern, which is supposed to give us a target, which is way low. We were trying to proceed towards there, but then we started moving up. Now, this is a message from the bond market that they have lost faith in the ability of the Fed to control the interest rates, and they probably do not think that the policies that are at play right now, both from a monetary and a fiscal perspective, are the right ones, and therefore they are signaling that they need more risk premium to stay invested for a long period of time in the bonds. That's the message that we are getting out here. As always, I'm going to look at the Canadian side as well. I'm looking for the Canadian bond yields to come down. The 5-year bond yields are linked to the mortgage, as I mentioned yesterday. So if they come down, Canadian economy will get a big relief, because the tariffs has already put a knockout punch on Canada, and the housing market is a big one. And if the housing market starts recovering, it's got a whole lot of ancillary, which in terms of furniture, renovations, home improvement, real estate sales, construction, all of those things will come back into play, and it will give the market a little bit of a boost. So I'm looking forward to that. And today we seem to be getting back into that direction again after a brief blip yesterday. Now let's go on and have a look at the indicators and see where our limits are for today. We have a resistance at $6,539 for today, and we have a support of $6,447 for today. Market sentiment is bearish. MACD is also bearish, and momentum is above average but a little bit flat. Plenty of room on the RSI. So we have to see what happens when the market opens. Pre-market, we are already up 0.27. As we saw earlier, let's go back to the futures. Let me just refresh where we are. We were up 0.36%, and we were at 6,545. So we are looking at a positive open today for the market for S&P 500. And then we look at NASDAQ. NASDAQ was above our support of 23,622.35 for the last 2 days, and therefore last 3 days actually. And I would say that that continues to be a support for today. And I would peg the resistance for today to be somewhere around the all-time high, around $24,009 or $24,010, something in that range. That's going to be the resistance for today. Market sentiment is bearish. MACD is just about turned over to the bullish side. Momentum is above average, plenty of room on the RSI. So NASDAQ seems to be stronger than S&P 500. VIX is surprisingly low. And that's again something that confuses me. Why is the VIX so low with so much of underlying problem? And friends, we had Israel getting into Qatar to knock out some Hamas officials, and that's a new provocation. And if you remember, Qatar had gifted a $400 million plane to Donald Trump. So it's putting a lot of stress on Trump and his relationship with Qatar. And Qatar has actually bought Trump's goodwill. So what is Trump going to do? What does Netanyahu have to offer to Trump? So all of these problems persist. And also the US airbase in Qatar is just around 10 or 15 kilometers away from where Israel had the strike. So that's my understanding. So this is indeed a very difficult situation on top of what is already happening in Gaza and with Iran. So I'm thinking that VIX being so low, it's something very strange. I would have expected VIX to go up and oil prices to have some kind of a reaction. So anyway, gold is giving us a very clear signal that it's keeping moving up. Yesterday, when I saw this, I said, oh my God, we have a topping tail, so we're going to start trend reversal. But this morning's action is giving me some hope. But this topping tail will not be extinguished until we go above 3,673.70, which is the top of this topping tail. And then it will be extinguished, and then we'll resume our bullishness. But right now, market sentiment is extremely bullish. MACD is bullish, tending towards the signal line. Momentum is above average, and RSI is above the overbought level. And in the past, we have gone all the way up to 83.72 on the RSI scale. So I am thinking that we still have a little more opportunity to go up. Now, I just got a news flash here. Brazilian inflation rate is reported at 5.13%. Consensus was 5.13, and previously it was 5.23. So I think Brazil has come slightly above. The consensus was 5.1. They came in at 5.13. So that's the news flash that we have out here. Now, let us look at QQQ. QQQ shows that we are going to open 0.33% higher, because right now it's up 0.33%. I would say that the QQQ has a hard stop today at 583.72. And it's got a support at 575.71. Now, if you look at put-call ratio, it's not as bullish as it was. It's tending towards neutral, but it's still a little bit bullish. And if you look at XLP, which is consumer staples, it has now started showing a little bit of an improvement as opposed to consumer discretionary. So consumer staples become stronger when everything starts to go down and there is a negative outlook. But if you look at the XLP chart, it is a bear flag that is forming out here. So bear flags typically tend to break out on the downside. So I wouldn't go by this as yet, but it's a note of caution that this is happening out here. Let's go on to look at AI. And in AI, NVDA is going up significantly. The news is that the NVIDIA CFO has revealed that the company can now ship H20 chips to various customers in China, potentially boosting quarterly revenue by $2 billion to $5 billion. Now, I will take this news with a little bit of a pinch of salt, because in the past, China had cautioned its companies not to buy the H20, and it thought that there is some kind of a backdoor in the H20 chip. And also, we had one of Trump officials saying that we are not selling them our best chips. We are selling them not even the second or the third grade. We are selling them our lowest grade of GPU chips. So all that pissed off China, and the Chinese government had warned its companies against buying H20 chips. What happens to that? That is the question. So it's true what the CFO is saying, that US has allowed China, NVIDIA to sell H20 to China, and they're working on special chips made especially for China to be sold to China. But whether Chinese government will allow its companies to buy it is the big question, right? So I'll keep that in mind. And again, if you look at NVIDIA chart, right, we had the head and shoulder pattern, and we had a target of 163.07, but we have turned around and we have broken apart above our resistance of 173.73. Right now, pre-market, we are at 175.55. So it's very clear message from NVIDIA that they're going to disregard this head and shoulder pattern, which is a bearish pattern. So our target no longer will sustain, because we have broken past our resistance as well. So for today, the support is going to be 173.73, and our resistance is going to be 183.92 for NVIDIA. But remember, market sentiment is bearish, MACD is bearish, momentum is below average. Now, if you look at Meta is down 0.29% in pre-market trades. It continues to get support at 737.95. And let's go to Google. Google is down 0.03%. It had a topping tail, which I thought was curtains down for Google, but that topping tail has been extinguished. So it's no longer a bearish symbol out there. We still have this gap down, which is going to keep on attracting Google, but Google is extremely strong bullish sentiment. MACD is bullish, momentum is above average. It's actually overbought. So I would expect some amount of consolidation out there or giving up some gains. Amazon is down 0.57%. Amazon will have a resistance at around 238.42, and Amazon is going to have a support. I'm just going to pull this out. Amazon is going to have a support today at somewhere around 230.81. Then we have Apple, which is down 0.52%. It was buy the rumor, sell the news event. And despite the fact that the Apple EarPods are a quantum leap, online translation, a live translation into various languages, and also functioning as a hearing aid and a few other things, despite all of that, the rates for Apple share, the price has gone down. It's a classic buy the rumor, sell the news thing. This is what I'm afraid of is going to happen when the Fed announces the rate cut. So now I would like to draw a line, trend line out here, connecting these two top lines and make this as a red one. So our resistances are going to be on this diagonal line of resistance, 241.27. And our next support, I would say, is going to be somewhere in the region of 225.01. Next, we look at Microsoft, which is up 1.43%. It's on a downward slope, and I think this is a bear flag which is being formed, and this is a flagpole. This huge red candle is a flagpole, and we have support at 498.75. Right now, we are at 505.48, and our resistance is going to be 515.06. Overall, market sentiment is bearish. MACD is bearish. Momentum is also below average. I think Microsoft will continue to give up gains. Now you look at Tesla. Tesla is up 0.44%. There's a lot of hype about Optimus Prime and other things. That's what is keeping this moving further. There is also news about Mega Pack 3, which can improve energy storage, and the Mega Pack 3 features upgraded batteries, while the Mega Block cuts installation time by 23% and costs by around 40%. So all of those are very bullish news, but you have to actually see what portion of the revenue comes from there, and those kind of analysis have to happen. I'm going to wait to see what the analysts are talking about in terms of these developments. But all said and done, I personally believe that Tesla is a lot of hype and not much substance, because from their EV perspective, BYD is doing way better in terms of market share. And also the negative image of Elon Musk has rubbed onto Tesla, and Tesla has lost in various markets in Europe and other places as well. And in India, Tesla sold less EVs than Mahindra, which is again another domestic EV manufacturer. And Mahindra has sold way more than Tesla. So that's also another pointer out there. So overall, if you take all of those things and then look at a top of the mind recall, if you talk about robotics, Boston Robotics comes to mind with their dog, which is there in IPL, the cricket league, and other places where it comes out as a mascot. And we have seen a lot of acrobatics and other stunts by Boston Robotics. Whereas with Optimus Prime, we have not seen those things. Then if you go to Robotaxi, you got Waymo doing way better as compared to Tesla. So I'm thinking that, you know, we may have all that data and everything. We don't have that robotics. If you go to AI, XAI does not belong to Tesla. XAI belongs to Elon Musk. And in the AI space, you got Perplexity, you got ChatGPT, you got Gemini, you got Claude. So many AIs which are doing excellent job, and they have got monthly subscriptions and everything going on. We don't have any such thing from Tesla. In fact, Tesla's GPUs were prioritized to be handed over to X for their AI. So if you look at it in whichever way, that's looking bad. And on top of it, Elon Musk has got the super humongous CEO package, which is of course target driven, but all those kind of money, from a shareholder perspective, you don't have much left to take after Elon Musk takes his cut. And there is no guarantee that in future he will not get into politics and bring a lot of negative feedback for Tesla. So that's my thought process. I'm in TSLQ. It's not doing very well, I'll confess. But I'm thinking any hype for Tesla is misplaced, and the right thing for Tesla is to come down. So probably this could be some kind of a layering, and then maybe it's some kind of a distribution for big holders to get the money out, and then it could potentially come down. That's what I would hope. Now, next, going on to Oracle. Oracle is up 31.56%. This is phenomenal. Oracle's shares jumped 2% to 311.52 after major contract wins, despite missing earnings targets. And the backlog increased, driven by demand for AI cloud servers, and growth forecast was raised by 77%. So all of that has given a pre-market jump for Oracle. It's doing gangbusters out here. And Oracle, we had an earlier target of 276.05, which kind of got cancelled because of a series of bear flags. But now Oracle has cancelled all those bear flags, and it's going up, and market sentiment is mending. MACD is still bearish, but momentum is above average and picking up very sharply. So those who have Oracle, congratulations to you. And it's amazing. And if you look at AMD, it's up 4.16%. It had a potential target of around 143.64 based on the double top, but now it is trying to negate that. And if it breaks about this diagonal line of resistance, which happens to be at 157.28, I was thinking that we'll be canceling this, and it has actually broken out above that. Right now it's at 162.21, which is just below our resistance of 163.27. So 163.27 is our resistance for today, and our support for today is going to be 157.80. SMCI is also moving upward. It's up 2.05%. And we have this diagonal line of support, which is going to be performing the role of the support today at 43.34. Right now we are at 43.84, and our resistance is going to be 49.96. So SMCI is also breaking out. So everything is breaking out. Even Broadcom is breaking out, 2.53% gain. So this pennant, which is being formed, is getting full expression out here with a lot of bullishness. So we'll have to see what happens because the market sentiment is also turned bullish. RSI, which was overbought, has cooled off, and it has got more room to move up. It can go all the way up to 84% on the RSI scale. So I think AVGO is also very strong. Palantir is also showing immense strength. It's up 2.21% in pre-market trades. This bear flag, which is supposed to break out on the downside, is now starting to threaten to get canceled and break out on the upside. So that's what I'm looking at out there. The only thing that gives me pause is the bearish market sentiment, bearish MACD, but the momentum is saying that it's a full-on go signal. Now that said, I'm going to look at Rigetti. Rigetti is down 1.88%. It's at 16.19. If you recollect, I had sold off at 16.10 because I developed cold feet when we came out of this bullish pennant. So I was waiting to buy it at a lower price, and I missed the opportunity. Now it's gone up again. So I'll watch this stock and try and see if I can get back in at a later date. Now that said, let's go on and have a look at Genomics. I have select shares that I want to talk about in Genomics. If you look at Prime, we had a target so we had a bull flag, and this was the flag pull for the bull flag, and this was the flag, and this was the upper limit for the flag, which it crossed yesterday and a day before yesterday, and today it's opening above this. So this diagonal line is going to get confirmed today, and having done that, I would say that I would take this this flag pull from here. I'll just put it out here and pull this down, and I can say that we have a target of 7.23 for Prime. So Prime could go all the way up to 7.23. Pre-market, it's down 0.24%, but you can see that the bearish sentiment is improving, and MACD is bullish and moving away from the signal line. Momentum is above average, and there's plenty of room on the RSI for it to go up. So I think today the market sentiment will also improve, and when the market opens, I think Prime will start moving up. Good morning, Inf. Thanks for joining. And then we have the next one, which happens to be Intelia. I don't have much to say out here. Let's go to Caribou. Not much to say here. Beam. Not much to say here. Alt Immune, it's a damn squib. It is just moving sideways. Editas has broken out of the diagonal channel, this parallel channel that we had. And now I want to watch whether it rides on this diagonal line of support. So for today, I would peg the support at 2.66. And the resistance could be around 2.84. Right now we are at 2.75. The bearish market sentiment is starting to improve. MACD is almost neutral. Momentum is above average, but not that great. Pre-market, we are down 0.36%. So I think we're going to test the support today. Illumina is down 0.63%. We have a head and shoulder pattern, which is supposed to be bearish, and we were not able to break through the neckline, but we have this diagonal line of resistance, which is going to provide resistance today at 99.94, and the neckline is going to provide support at 93.28. Overall market sentiment is bearish, MACD is neutral, momentum is also neutral. CRSP Therapeutics is down 0.15%. And we are well within this regression channel, and our support continues to be 53.13, and the resistance is going to be the top of the regression channel, which is 58.06. So that's our resistance for today. But overall market sentiment is bearish, MACD is bearish, and momentum is just below average. Now, apart from that, what I would like to do is go and look at Ginkgo Bioworks. If you recollect, I had bought this based on the bull flag and I've sold it off yesterday. And since then, the stock has gone down further. So right now, this has become a bear channel. It's no longer a bull flag, in my opinion, because it has traveled more than 50% of the flagpole downwards. So it's no longer a bull flag. So it's looking really bad. Market sentiment is bad. MACD is also bearish. Momentum is below average, and it's dropping pretty significantly. Precision is another company in which I had invested, made a lot of profits, sold it off completely day before yesterday. Since then, it's continuing to move down. This morning also, it's down 1.21%. And I'm thinking that we have to wait a little bit to see the marketing plans going out and see the next quarterly report, how they are performing, because the funding they have taken is at a high interest rate of around 10 point something, which is typical for this kind of company. So there is no fault out there, but it comes with some stringent conditions of performance. So we want to see how likely it is that they may meet the performance so that we can pile into the stock again. I also have Lilly. Lilly has been doing well. It went to the beyond the middle of the consolidation range for this parallel channel and this regression channel. So it has got a lot of strength and it could move up further, in my opinion. But pre-market, it is down 0.24%. And then the other company I want to talk about is Rare. Rare is Ultragenics. They have got a therapy which is going to be approved by FDA, because when the PLA was submitted and they gave a complete response, comprehensive response, at that time, what they said is that they had some issues with the manufacturing facility, and during the inspection, they come across some issues. And Ultragenics has already been manufacturing other therapies which are monetized and already in the market. They got plenty of funding in their balance sheet. So I'm thinking that getting an approval from FDA for the BLA is not going to be a big issue. And even if they are not able to address everything that they are doing for in-house manufacturing, all the issues raised by the FDA, they can always subcontract to a third party which already has FDA approvals for manufacturing. And then they'll be able to overcome that problem and then work on their own internal manufacturing. So whichever way you slice or dice, I think Unilinks is a winner. And that's why I'm watching this. I have got 100 shares of Unilinks, and it's neither in profit nor loss. It's just fluctuating between plus and minus. So I'm watching this carefully, and I hope you guys do as well. So that brings me to an end of today's session, my friends. Can I make a request? RKT. Okay, let us see RKT. Where is RKT? So RKT will be a purely fundamental analysis, rocket companies, because I don't know what the company does. So it's going to be fairly technical analysis. And oh, wow. This chart looks pretty good. At first glance, I can say that the market sentiment is bullish. MACD is also bullish, moving away from the signal line. Momentum is pretty strong. And pre-market, we are up 2.49%. And one of the newsflash that I see here is that rocket companies are upgraded by Bank of America Global Research from neutral to buy, with the price target increase from $21 to $24, representing a 17.2% upgrade for the stock's last price. That is being reflected in the pre-market action today. Now, if we were to look at this formation out here, I would say that there are a few ways to look at it. One is I would like to draw an arc. So are we going to end up having a cup and handle? If we do so, then I think I'd like to draw a target for this, which is quite possible. So I'm thinking that potentially we may have a cup and handle pattern coming up. And in terms of resistance, it's all greenfield right now, because I don't think we have older resistances. Oh, we have plenty. Sorry about that. We have plenty of resistance. So let me go to a 1 week time frame. That's the 1 week. Okay. Cup of tea. So in the past also, there was a cup and handle formation which did not fructify. And right now also, I think we are going towards a cup and handle. Okay, there's not much I can glean out of this inf. So I think I'll stick with what I said for the first one so far. I would like to see the cup and handle target materialize. And if we were to put a target to this, I would like to take from here and move this here. So we are potentially looking at a target of around 28.62. So that's what we are seeing there. So that is a potential target that we could have. But these are all my personal opinions, not financial advice. So please take care. Congratulations, Inf, on having the call contracts. All the very best. And yeah, so that's all I got, my friends. And I'll catch up with you again in the next video and in the next live stream. Okay, bye guys, take care, see you then. Inf, thanks for joining. Bye.